welcome to the Bitcoin Business Podcast. Today I have an incredible guest here, Garrett Johnston. He is the Senior Vice President at Marsh. And today we're going to be talking about insurance in business, the intersection of Bitcoin and digital assets, and hopefully shed some light on how this industry works and some new developments that are going to happen with Bitcoin and other new technologies coming on the scene. So, welcome to the show, Garrett.
Thanks, Daniel. Great to be here.
It's a pleasure to have you here, and I really look forward to this. I think to start out with, obviously, people want to know, if they don't already, who are you? What are you doing? How did you get into Bitcoin? And well, that is a lot, but maybe just start with introducing yourself. I think that would be fantastic.
Sure. Garrett Johnston. I sit here in the United States. I work for an insurance broker called Marsh. Have been in the commercial insurance space for over 25 years, so that's the industry I've kind of grown up in and always been in. Um, I really got into Bitcoin in around 2019. However, prior to that, I was really what I think most of us in the Bitcoin space would kind of figure like a TradFi person. So I was an
Right.
underwriter at a firm called Chubb, one of the major carriers in the US. And I did traditional financial insurance services. So I would do the insurance for banks, for stock exchanges, for private equity firms.
Mm,
Anybody in the TradFi space, when they got sued, there is almost always an insurance policy that sits behind that lawsuit. So I was always an insurance person, typically for those who are not familiar with the space typically sits behind most litigation when things go
mm,
south, either from a natural disaster, but more often, the world I was in financial services, it's not a hurricane that creates the insurance event. It's a
right.
lawsuit. It's public company litigation. It is a major theft at a bank. It's something like the financial crisis and all of the credit issues that revolve around financial
Mm,
services. Um, the insurance world sits in the middle of that, often a little bit in the background. But we always kind of say insurance folks tend to be kind of second row to the CFO and the general counsel. So there's a little bit of we play in the world of that the CFO cares about from the financial balance sheet protection,
mhm.
as well as the legal protection and legal issues that the general counsel deals with. So insurance usually is a policy that both of those contingents, when stuff goes south, are involved. So we get not necessarily a front row to those things, but we're very much in the room. And the insurance carrier relationship is a very important one, but it's usually not very public and it kind of happens behind the scenes. But insurance often is a little bit of kind of the lubrication within the financial system that a lot of companies are able to do bigger, better, broader things because they can
Mm,
transfer that business risk off to a third party. And when you think about it, in its essence, all insurance is taking business risk, monetizing it, wrapping it around some language, and passing it off to a third party, which would be the insurance carrier. And you're paying a premium, you're paying a price to transfer that risk. What I always counsel clients, I'm on the brokerage side now, so within insurance, I'll try to kind of lay the landscape of how insurance interacts. So you have the insurance carriers who,
mhm.
in my initial job as an underwriter, my job was to go in, meet XYZ client, determine what their risk profile was, uh, underwrite my terms, how broad a coverage I was going to give, and what price they should have to pay me at the time representing the carrier
Sure.
to transfer that risk from their balance sheet onto the carrier's balance sheet. So that's fundamentally what the underwriter's job is to underwrite and assess risk, determine how much it should cost, and what you'd have to pay me to take that risk on.
Mm,
On the broker side, you're basically a consultant in the middle. So for folks in the US, just like shopping your mortgage, you can either go direct or you can get a mortgage broker that will shop multiple markets and bring the best deal to
right.
you. Insurance brokerage is the same dynamic where you've got the broker shopping multiple carriers, bringing you the best deal. And again, back in many ways, we are a risk consultant, right? So insurance
Interesting.
typically gets labeled with kind of that used car salesman, kind of like sketchy guy vibe, trying to hawk insurance and make a buck. Um, there's elements of the insurance world that is like that, but in the commercial large corporate space, it is very similar to a tax consultant, a legal consultant, a business
Okay.
consultant, but you are ultimately negotiating a risk transfer mechanism for your client. And insurance
Right.
can solve a lot of things, but it can't solve everything. So walking your client through where the risk intersections are and what the cost of risk to transfer that to a third party are going to be. Because at the end of the day, risk does not care whether you insure it or not. It's coming for you either way. Now, that's something I always counsel my clients. A risk does not care whether you insure it. It's there
Okay.
regardless. So you have to make a business decision of, do you want to retain that risk? Do you want to transfer that risk? And the cost to transfer that risk, is that worth it to you? And that to me is really where the art of insurance broking truly resides, is you need to know the industry you're consulting in, right? You need to have depth of
Yeah.
knowledge in that so that you can counsel that client of, should they take the risk? Should they transfer the risk?
Mm.
Should it be some combination of both? And what alternatives are there out there? And in the corporate insurance space, there are a myriad of options out there. So that's,
Interesting. If
yep,
I can I'm just very curious to pull on that. So in the commercial insurance, it's not just about, well, let's buy the insurance, that box is checked off, and let's move on. There's a deeper relationship with potentially the broker and the underwriter to not just offer
yep.
the insurance, but also offer advice and counseling and different risk strategies. This, I don't know how in depth it is, but there is a closer relationship. Is that correct understood?
Yes, and it's an arc, and I think one of the probably biggest
Mm.
misconceptions with companies that I kind of meet for the first time is that there's a spectrum on everything. So in
Right.
startup phase, when you are, cash is tight and you need to conserve everything, there is legitimately and rightly so an element of kind of, give me the minimum amount so I can check the box,
Mm.
keep my cash burn rate as light as possible, but comply with either a lease agreement or some kind of contractual requirement that I need to comply with to run my
Yeah.
business. There's a place for that. However, what, again, that whole dynamic of risk doesn't care whether you insure it or not. As companies grow, the risk profile materially changes. And as companies launch new products, right, the risk
Yeah.
profile changes. So, particularly in just back to my background real quick. So, of the
Hmm.
two industries I really focus on, it's digital assets, which within that space, I personally am a Bitcoiner. I tend to focus mostly on the Bitcoin ecosystem
Mm.
versus broader crypto. But I also spend a lot of time in what we kind of refer to as sharing economy. So that's ride share, last mile delivery, micromobility. And those spaces are almost defined by small companies that hit a niche and have hyper growth. Okay. So
Mm.
um, they those companies go through very drastic risk profile
Yeah.
changes where their insurance might go from it might go from 20,000 in annual premium to 200,000 in annual premium to 2.8 million in annual premium, all in one renewal cycle. I have literally had clients go from 80 million to over 100 or 280 million in one insurance renewal. This was in
That's
COVID, so
crazy.
there was some certain businesses benefited from everybody eating at home. So certain clients had just these crazy growth curves. And if you don't manage the insurance risk profile, like the biggest issue I run into with startups as they scale, and this kind of plays into the digital asset space because we're going through very similar territory
Ah,
currently, but where I see the next 4 or 5 years is kind of this hyper growth, adoption, hyper Bitcoinization, et cetera,
right.
is companies are going to go from 0 to 10 very quickly. And often what gets lost in there is that insurance margin, right?
Right.
Which again, to me, I always tell clients it's more important to really manage the marginal spend of insurance versus the dollar amount. So,
Hmm.
if you 5x your revenue as a company, that's great, but you shouldn't expect your insurance premium to not go up. Not proportionally, but it's not going to go up 10% if you just 5x your revenue,
Mm.
right? So typically it's that kind of unit economics of if your insurance spend is 25 basis points, really that's what you want to manage to, with the caveat you open a new product. So let's say you are a Bitcoin wallet, right? And then all of a sudden you get into
Sure.
custodial services, right? I want to be a custodian. That's awesome. But here's a whole new level of insurance that has to wrap around it. And by the
Mm.
way, it's not cheap, right? Or you have a Bitcoin advisor that wants to start offering a mining product and a co-hosting product on the side. Awesome, I'm all for it. There are insurance issues that wrap around it, and so if you're not considering the cost of what the insurance that comes with that,
Yeah.
oftentimes companies as they scale, probably the biggest kind of sin that they often do is the biz dev folks get this great idea. They're off to the races. And then they call me up, the insurance guy, at the 11th hour, like, hey, we're launching next week or next month. Do we need insurance? And the problem is they've already mapped out their pro formas, their margin, they're high fiving each other because they're
Yeah.
just going to do great. And then I get to be the guy who comes in and is like, awesome, high five, but you've got to buy this insurance product, right?
It's very, very,
And here's
I
what this
guess,
insurance product costs, and there's often that kind of awkward silence of, oh, we didn't account for that. So that's, if I have one
yeah.
piece of advice for the listeners out there when it comes to insurance, that whole box check mentality bites you on the back end if you don't. As your risk grows, your risk advisor, your insurance broker, really should be part of your growth team and helping you really kind of look around the corners over the horizon of, if you want to go here, there are insurance options
Hmm.
and consequences for all of this stuff. And I say options and consequences because the other big misnomer in insurance, or how people, the general public views insurance,
Hmm.
is they view it like taxes, right? Nobody wants to deal with it. It's like a necessary evil of
Right.
doing business. But insurance
Hmm.
often is at the intersection of trust and safety with your clients. And so insurance really, if it's designed right, it will always, have a cost dynamic to it, but it can be a growth supporter to the business if it's structured right.
Hmm.
And that's where you need a good risk advisor to kind of be like, okay, if you want to do this,
Yeah.
why not look at an insurance mechanism that wraps behind it? And like a good example that's very public and out there is the Airbnb host program, right? So Airbnb says, hey, if you list your home on Airbnb, we've got this, we guarantee that if you have a renter damage your house, we've got your back. And behind the
Hmm.
scenes, there's an insurance policy that sits behind it. But like that's just a good kind of example of where an insurance product enables that trust and safety narrative with a client and
Right.
enables growth,
Yeah.
right? So even though there's going to be a cost to that, if you can embed it in the way that it will enable growth, everybody wins, right? Because the people on the platform have a better experience. Theoretically, that platform garners more clients
Yeah.
because the trust and safety narrative is better. So then when you bring that over into kind of Bitcoin land, like, we're sitting here towards the end of March, but like the kind of a lot of the activity over the last months has been on, hey, we've got a new, custody solution. And by the way, we've got this nice, custody insurance policy that we can bake into the mix, right? Which is great. I mean, that is an important step forward for the business overall. What I look at that as somebody who's been in the business this long is it is a first baby step of, it is
Mm,
literally the whole custody insurance piece. It's far better than it used to be a few years ago. It still has a long way to go, and it literally scratches maybe like a couple percentage points of the ecosystem of insurance that is out there that can support and wrap around this industry. So part of my real kind of passion as a Bitcoiner who happens to be in commercial insurance is
sure.
how do I take my insurance knowledge to help drive Bitcoin adoption out there in the ecosystem, right?
Brilliant.
And that's really kind of where my mission comes from. And when I onboard companies or consult with them, that's really where my passion lies of like, okay, it's like having a great accountant with your taxes. Like you don't necessarily want to talk to them all the time, but you have to. And if you involve them, they will likely keep you out of trouble, right? And they will help
Yeah.
say, hey, you could actually have a benefit on your taxes if you structured it this way. Insurance
Yeah.
is very, very similar, right? If you just ignore it, don't give it the time and treat it like something you don't want to deal with, it often slowly eats into your time. It's poorly structured, and then when stuff hits the fan, because it inevitably there will always be some event that at some point hits you.
Right.
That is
That's life.
when no different than in taxes is a great analogy. It's no different if you haven't done the work, the kind of renewal or two or year or two prior, you're not set up for success, right? So how can I, as an insurance broker who understands the Bitcoin space really well and the traditional financial space, um, push that adoption curve forward and help companies
Yeah.
think through uh, that?
Well, thank you for that whole introduction. That was actually very, very interesting. I can say with a lot of confidence, I'm not that old, but I've never heard anybody explain insurance in the way that you just did. I'm not sure if passion is the right word, but coming somebody that truly understands this like you, it's a different way of explaining it than you normally talk about it. As a matter of fact, insurance is something that very, very rarely gets discussed in business, I think. It's like you say, it's kind of an afterthought. People don't really want to deal with it. But definitely a very interesting perspective. And if I'm not mistaken, I remember hearing you saying in the past that you would perhaps rather stay with a traditional company like Marsh and then work on making Bitcoin adoption happen from the inside instead of kind of extracting yourself out of that and going Bitcoin only, for example. Can you maybe speak a little bit to that? Because I think that's very admirable, actually.
Yeah, and I think there's a lot of us that are still in what maybe is like the traditional corporate space that are
Sure.
Bitcoiners. You have, as you go down the rabbit hole, I've heard this theme a lot of not necessarily insurance people, but maybe investment professionals. Um, is you have that kind of moment of like you get so passionate and the conviction of
Yeah.
why Bitcoin hits you so hard, the more you read and explore it, that you have that kind of like and I definitely had this in about maybe 2021, somewhere around there, of I was a 20 plus year insurance guy. I'm like, I might just totally get out of insurance and do
Right.
100% Bitcoin, right? And when I really started thinking through Bitcoin needs everybody, right? And I'm like, well, what can Garrett bring to Bitcoin that others don't, right?
Hmm.
I'm a finance major too. So like at the time I was just digesting all these, macroeconomic podcasts and I love listening to that stuff. But I'm like, Bitcoin probably does not need another uh, person talking about, and because there's fantastic people out there, fantastic that I
Yes.
still listen to. Um, and then it just kind of like settled in after I wrestled with it for a bit of again, nobody loves dealing with insurance, but insurance is a big, important part of the ecosystem. So it hit me in two areas. One is that the clients in the space need an advocate who understands their business on the inside of these very
Mm,
fiat traditional industries. No different than a Bitcoin native company really benefits from a lawyer that understands Bitcoin,
right. Good
benefits from an
perspective.
accountant that understands Bitcoin, right?
Yeah.
Benefits from a PR consultant that understands, digital assets and all that stuff. So, insurance is one of those really necessary parts of running a business that people don't typically enjoy. That they need a good risk partner that can say, okay, let me do the heavy lifting. I already know your industry really well. How can we think strategically and start plugging you in, bringing all the various products? And the reality is, most of the products out there need some tweaking because they were built for traditional businesses, but there's a lot
Yes.
of overlay. And what I see currently, the other point that is really apparent to me that is not well understood, and another part of kind of where I see my role in the as a bridge between traditional, very kind of fiat-minded insurance industry
Right.
and Bitcoin is the whole use case of Bitcoin as a treasury asset within the insurance community, right? So when you think of at a very high level, insurance is a we pay in now, right?
Hmm.
We're paying our premiums in, not expecting a loss, but we're paying into this pool of money for an expected one of us out of the group is going to need to tap from that pool for some event. So in its most simple form, it's a bunch of individuals or companies pooling their money together into an insurance company. That insurance company holds the money, invests it so that it is there for when the payout happens. And I think what's not well understood outside of the insurance community, and where some of these frustrations of why do my premiums keep going up? Why, I never feel like I'm getting the fair shake from the insurance carrier, et
Mm.
cetera, is the insurance carrier community is the one that a lot of policies are written on what we would refer to as an occurrence basis. So you could have the easiest one is like I get in a small car crash this afternoon. Nothing major, but I strain my neck, right? And it's sore, but nothing really happens. But 2, 3 years down the road, I start having all these major back issues emanating from that
Mm.
small crash. So the policy trigger is going to be, let's assume I have a crash today, is going to be on today, but the actual payout of the back surgery that might be, at that point with inflation, might be $500,000 at that point.
Right.
That gets so the money collected today by the insurance carrier needs to be preserved with long
Yes.
duration for the payout down the road. And so, what would any of our favorite macroeconomists, like podcaster guys, say is like, Bitcoin is the apex asset. And then, what my kind of like, where a lot of advocacy work still needs to be done is
Mhm.
within the insurance community. If you have duration over a couple of years, which a lot of these pools of insurance capital do, well,
Mhm.
what's the best risk adjusted asset to put into your portfolio? Like
Mm.
it's Bitcoin, right? And there was legitimately a year back, um, politics aside, but prior administration where it was generally had a anti or kind of antagonistic view towards the entire digital asset community. Insurance carriers, if there is not, because they are holding risk for oftentimes 5 to 10 years before the books are closed out,
Yep.
they are not going to jump into a risk pool where there's politicians fighting about what the regulatory framework should look like, right? So, one of the dynamics of insurers is they typically want to see 5 to 10 years of operating history in an industry
Right.
before they really jump into that risk pool because they don't want to jump into something and then the floor falls out, which would have been, if you think back through the history of digital assets, we could all be, I could as an insurance broker, 3 years ago be saying, you need to write exchanges, you need to write this right before all the FTX like
Sure.
craziness, right? And those carriers are still paying those claims, right? Most of us in the community have like moved on up to the next and we're looking forward. The
Right,
insurance
they haven't
carriers are
moved on.
holding the residue of all of that.
Yeah.
Um, and for me, like I started in the business in 99. So my first big economic event was the dot-com boom, right? And bust. So I think a lot of what's not necessarily appreciated by people outside of insurance is a lot of the people that are managing and signing off on, are we going to write a large miner or a large crypto exchange? They're all guys typically and gals in their 50s that were right there during the dot-com bust, right? And most of those companies, right, were saying very similar thematic things of, hey, we're a dot com. The rules don't apply to us. We're different. You don't have to worry about the risk because of blah, 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 right?
Hmm.
Well, they all, 99% of them go bankrupt, they disappear, and the insurance carriers are left holding that risk bag where they paid out claims multiple years down the road. So that leaves an impression that when the next digital transformation goes on, right, this time more in the digital asset space, they are rightly so, they've got a lot of battle wounds that I think there's always some generational issues too of most of the founders I talk to in digital assets are in their mid to late 20s to early to mid 30s. And there's
Sure.
nothing wrong with that, but they are people that did not live through some of those. A lot of them
Yeah,
lived maybe through the financial crisis, maybe when they were in high school or like in college, but
sure.
that's very different from running businesses. Um, like I'll give
Absolutely.
one example. I remember very vividly on 9/11. I was working for one of the large insurers, and we did not. The company at that time did not manage how many customers it had in one building. And I vividly
Hmm.
remember being on internal phone calls post 9/11 where the we would talk about the earnings hit that the company took because they didn't realize they had a large client on floor 3, floor 8, floor 15, floor 100 and 10, whatever. Like the aggregation issues, those are all lessons learned over the years. And so companies are very different about
Mm.
that approach, but that's just a good example of in insurance, you often learn through losses, right? And case
Right.
law and policy language emerges from losses that oftentimes are misunderstood, and underwriters put their capacity out there, covering things they didn't anticipate covering. And then the claim comes in, and there's a little bit of like, ooh, I didn't plan to, pay for that. Now I need to ask a bunch of questions around it. Now I need to either exclude it or charge a dedicated premium for it. That's part of just the reality of like, in many ways, the insurance process can be fairly painful, where clients are often like, why are these applications 20 pages? Why are they asking me question after question after
Mm.
question? Well, it all comes from history of loss on the back end and lessons learned from it. But
Interesting.
it's a little bit of a cat and mouse game because technology is always moving at a much faster pace than
Yeah.
insurance companies are catching up to. So there will always be a bit of a disconnect there.
It's kind of like a similarity to regulation, always kind of playing a catch-up game, I guess, because
Yeah.
technology is just moving too fast. Man, that was very interesting. There's so many different ways I could take this. I think we have to remember people might be listening to this that don't actually understand Bitcoin and digital assets and what it even, why we say Bitcoin is a great asset. This might be, some people might think this is a very simplistic question, but why does an insurance company even need to invest the pooled capital? Why do they not just keep it as cash? Like what is even the problem? And what has been the traditional ways of preserving or potentially growing that capital?
Yeah, so my real journey into Bitcoin, I was a finance major in college, so I'm definitely a numbers guy, kind of macroeconomics or something that I always am kind of listening and reading about. And
Sure.
it was the whole like question of like, why does the financial system feel broken? Like, why does inflation actually exist? These like core questions of
Yeah.
like, what is money actually? All that kind of stuff. And that to me was um, the what got me down to, I think most of us, it's not so much Bitcoin, it's those questions of like, what's the solution when everything seems so broken? We're just
Yes.
deficit spending, like in the US here, like we just have this like really dysfunctional, um, people are getting raises, but they're not keeping up with the sense of, state of inflation or CPI versus real inflation. And everybody on the whole, right, whether you're lower, mid, or upper class for the most part, like you're feeling that pressure and that pinch of,
We all
man,
feel
it's
it. Whether or
getting
not we can put our
harder.
fingers on it, we feel it, right?
Right, right. And I'm personally like I'm in my late 40s. I'm the middle of three kids. My younger brother's much younger, so like I definitely view my generation as kind of that cusp generation. Like I've got plenty of friends that are maybe 5 years older that bought into real estate at like just a few years earlier than I, and they have this like ridiculous paper equity wave that they just right place,
Mm,
right time, right?
yeah.
Um, I'm kind of in the middle, and then I have younger siblings, and then a lot of coworkers in their 20s and 30s that you talk to, and like you just hear constantly how difficult that jump to home ownership is,
Yes.
and you sit there and you're like, that's inherently broken, right? So that's those were the things that really kind of got me into what's wrong with the system. And then once you kind of like really start digesting that it's not so much the inflation, it's the devaluing of the base money via
Yes.
printing of the Federal Reserve here in the US. That was my unlock moment where I kind of took the why is inflation going up and you flip it and you're like, oh, it's actually being debased. And why is it being debased? Because you can print money at absolute will, right? And I'm going through the rabbit hole during COVID, right? So
Mm,
you see the money supply just going off the charts, right? And then people saying, why is everything costing so much? And again,
yeah.
you flip that narrative and everything starts to really make sense, right? So then
Yes.
in the insurance world, one of the things that carriers often cite these days is this term called social inflation. Okay,
Mm,
so if you're a client that, let's assume your risk is completely static, which is never the case, but let's just assume theoretically it is. Often, if you are in casualty lines, which are going to be like bodily injury, slip and fall type coverages like general liability or automobile liability,
hmm.
often carriers come in at renewal, and insurance policies renew once every 12 months. So you come into renewal, and oftentimes they're like, all things being equal, rates are going up 10% because of social inflation. And social inflation is a kind of catch-all term in the industry that talks about claims costs are going up, jury verdicts are going up. And so that's the social inflation piece. And you think,
Very great.
how do you deal with that? Well, from an insurer standpoint, insurance companies are saying, because when we look out, because they have actuaries that their whole job, an actuary's job is to price risk as well as estimate future losses and future loss costs. So an actuary oftentimes is looking in the rearview mirror at the last 7 years of what has been the trend line of automobile liability.
Yeah.
And then they look at what do we predict the next 7 years is going to look like based off inflation, based off, the telematics embedded in cars is great, but a fender bender on a Tesla is multiples higher than a fender bender on a Toyota truck, or just like a
Sure.
baseline car. So those things all have to be penciled in an actuarial model. And then what is case law? And this is a little bit of a US dynamic too, of like what is case law happening in the US, right? So are jury verdicts getting crazy, right? So there's this term called nuclear verdicts where somebody might sue somebody for something that you think should be valued at $1 million. It goes to a jury trial in the
Mm,
US and the jury award is 150 million. Just like a huge dislocation between what is expected and what actually happens. Those all
sure.
have, the reality is insurers are the ones that foot that bill, and then that inevitably that cost has to be passed down to the customer via higher insurance rates. So,
Right.
it's just the dynamic of insurers are looking out, knowing that they're kind of holding the liability bag for 7+ years. They've got to try to estimate what the next 7 years look like. They've got to guesstimate what the regulatory environment looks like, right? Again, reason why insurers are not jumping at the ready to write digital assets, because the regulatory environment it's much more certain today than it was 6 months ago, at least in
Mm,
the US, right? So
sure.
there is certainly good trajectory on where the business is heading. Um, but we're not 10 years of water under the bridge from a
No, no, no,
litigation
no.
standpoint that insurers can say, hey, I've got a good read on what the next 7 years are going to be. Therefore, I can price my product accurately. And that's
That makes
probably
sense.
another misconception of, people feel that insurance companies gouge them. There's always going to be cases of that. But when you sit down with most, global leaders within these insurance companies that have been doing this for years, like the reality is most insurance companies are looking to get a reasonable return on their investment because it is a business, right? And
Sure.
most of them will tell you, like, we just want to earn a 10% on average, plus or minus a few points, 10% return on investment, which I think is fair as an industry. The
Yeah.
problem is, how do you do that when, and again, just in the US, the amount of seismic shift in posture between the prior administration to the current
Mm,
administration, if we just pick digital assets, because there's shifts on everything, pretty much. How do tariffs bake into insurance models, right? Because
mm,
insurance has a whole ecosystem of supply chain risk, right? So,
yeah.
some of the podcasts I listen to talk about some of the miners having supply chain issues where ASICs are being held up at the border uh, over very arbitrary sounding like problems that arise, and how
Mm,
much of that is baked into the geopolitics of what's going on. Um, but there's insurance that can wrap around that, and there's insurance that can smooth out some of the earnings volatility of having your ASIC sitting at a customs border for 6 months, and you can't
yeah.
bake that in.
Very interesting. I kind of do want to go back a little bit to the whole inflation thing. I think it's very important to kind of put a
Mhm.
stake through that because it's so key for people to understand because it almost sounds to me, and maybe I'm misunderstanding this, but the term social inflation, it sounds like what it's actually describing is actual inflation, like the actual increase in prices. Now certain things happen and things change, but the natural state of things isn't necessarily to get more expensive. As a matter of fact, it's kind of counterintuitive. I mean, there's certain things, this isn't a blanket statement, but we're always getting better, we're always getting smarter, we're always getting more productive. Should that not lower the cost of doing things since the cost is just the cost of doing it and we're getting better at it? So if you believe that CPI is the actual inflation and that's the metric that you use in your business, it doesn't line up with reality because CPI might say, well, there's only a 1 or 2 or 3% inflation, but that's not what we're seeing. And
Yeah.
as business owners and as insurers, you look at the actual cost of things going up, and it is probably closer to 7 to 15%, especially since COVID. And I like your explanation that it's about dilution. When you have a sudden increase in the money supply, you don't even, if you just think about it logically, whatever amount of money that you had already has now been diluted and the purchasing
Yeah.
power is less. And so what is the traditional way that insurance companies have kind of well, they can raise their premiums, but what do they do with the pool capital? Do they invest it in treasuries, or do they bet it on the stock market? Like what are you traditionally done? And
Yeah.
maybe if you could bring that into how Bitcoin, well, you were touching on how Bitcoin moves with that. I'm very interested in hearing more about that.
Yes. So I'll clarify. I think social inflation is, if I try to boil it into its simplest term, it's going to be real inflation plus uh, elevated jury verdicts. So,
Okay.
jury verdicts are not going to be, um, it's not an inflation metric, but it's a metric that has to get baked into the sauce, so to speak, on how they
Okay.
calculate their trajectory on loss costs. So, yeah, to your point, most carriers sit on just huge pools of capital, right? Because they have to collect all these premiums and be ready for
Right.
the next, hurricane season, et cetera. And when you speak to most of them, the vast majority of them, they are in short duration treasuries
Mm.
and cash or cash like instruments. So like to your point, like this is the whole like melting ice cube scenario of, if let's just use round numbers for theoretics. If the true
Cool.
inflation is say 15%, and you just collected $1 billion of premium from all your customers, you've got $1 billion, you're going to put it in, and the real inflation is 15%. So over the next 7 years, 15 is going to almost obliterate your entire capital pool, right? Compounded.
Yeah.
And you are going to invest that in treasuries in short duration, like securities that are producing a yield of 3 to 5%. You lose, right? You lose as an insurance company. So therefore, the only way to do it is you project your loss costs. Have the delta has to make up for that, and
Mhm.
that just results in my premiums need to be higher. My loss trajectory over time only goes up because it has to reflect true economic inflation. Now, if you do that on a Bitcoin standard or put Bitcoin into the mix, Bitcoin is deflationary over time.
Mhm.
So if you took that same $1 trillion of capital, put it into Bitcoin, right? It would make your losses, instead of trending out, they would trend down, right? Because all of us that
Mm.
have kind of gone down the Bitcoin rabbit hole, you take any asset that seems like it's getting away from us. Real estate is the probably most tangible to most of us. And you then flip it into Bitcoin denominated terms, you see that asset prices all fall against Bitcoin. Liability
Yes.
costs, therefore, all fall against Bitcoin. The reason carriers don't do it right now is they, you have to acknowledge that Bitcoin is volatile too. So the
Of course.
volatility of Bitcoin within an insurance capital pool is a legitimate problem, right? Because you can't
Yes.
take that $1 trillion and have a 30 to 50% correction on the way up, which we all know,
Mm.
it corrects on the way up and you stretch it out and it looks, the duration over 4 years is pretty undeniably positive, right, for Bitcoin. But what do you do in those 0 to 6 months
Yes.
when it's very choppy? And insurers, rightly so, have a fiduciary duty to their policyholders to preserve capital. So I don't honestly know what the long term answer to that is. My thesis and my guess is that when you do look at large insurance companies, they do often, to increase risk adjusted returns, they will put 1 to 5% of their entire capital pool into riskier asset tranches. Maybe it's
Mm,
commercial real estate, maybe it's private equity, maybe it's hedge funds, because they're looking to put it, mostly cash, mostly short duration, very secure,
yes.
stable on a top line US dollar basis. And then they'll try to enhance that return by putting, small single digit tranche into some kind of alternative higher risk, higher return asset.
Right.
And
Very
for
interesting.
most of us that have gone down the Bitcoin rabbit hole, you're like, why not just Bitcoin? Right?
Yeah.
Bitcoin has better risk return dynamics than just about every other tranche you can put in. So I don't realistically see a world where insurance companies go full blown Bitcoin. But I
Right.
do very much see a world where there will absolutely be a 1 to 10% allocation to Bitcoin in those pools. And those pools are so massive that
Mm,
it will drive the needle. And then things like all of the kind of dominoes that are falling from a regulatory resistance standpoint in the US, the Strategic Bitcoin Reserve, like all of these
mm,
things, SAB 121, where now banks have a roadmap to custody Bitcoin. Like there's all these Bitcoinization of traditional finance will start to allow the insurance community at a certain point to start stepping in. And then that aside, there are some first adopters, right? So generally speaking, when you look at the global landscape of insurance, most U.S. insurers um, are they're never first to the party on these like more leading
mm.
edge technologies or industries. It's usually done through Lloyd's of London or communities like Bermuda or the Cayman Islands, which have very um, innovative, postured insurance environments that are regulatory
Mm.
schemes that encourage exploration and creativity. So
Sure.
there are Bitcoin denominated insurance policies out there. Um, very limited use case, very slivers of coverage in the grand scheme of insurance, but they are out there. So we are seeing early stages of where I absolutely think Bitcoin denominated insurance policies will be a thing of the future, but it will never be like the 50% plus dynamic. Like
Right.
the
No, it
fiat
makes
based will be
perfect sense.
standard. Yeah.
I think that made perfect sense. There's a few things I kind of want to pull on that topic because I think if somebody's listening to this, I'm not even encouraging anybody to take that $1 billion and put it into Bitcoin because the investment as a treasury asset has to make sense for the business cycle and the demands for liquidity and cash and all that. And so Bitcoin is volatile, but if we decouple the volatility from the risk, because volatility isn't risk in itself,
Right.
Bitcoin is actually very risk averse. If you ask me, if you compare it to equities and real estate, there's a lot of different kind of risks that don't apply to a digital commodity. But the volatility, some people say volatility is vitality. It is volatile to the upside, but managing that volatility is that's the key. That's where the smart people are going to make the money. If you can plug in Bitcoin and you can get the gains while minimizing the downside. And I might be getting a little bit above my pay grade on this, but what I'm seeing right now, some very, very interesting ways of integrating Bitcoin into traditional financial products like Bitcoin bonds and Bitcoin for real estate loans, for mortgages. You put a little bit of Bitcoin in and it lowers the rates and all. Do you see that that's probably something that is going to happen? You did already touch to that. You just
Yes.
plugging in a little bit Bitcoin, you're getting the performance, but minimizing the downside of the volatility, for example.
Yeah, and I think that's what's so exciting to watch. And to your point, like Bitcoin backed loans where
Mm,
some of them that we've seen, they're not denominated in Bitcoin, but they're just putting a portion of the collateral in Bitcoin. And then you simply just run the numbers of what that looks like. It's good, and this is where I think the journey that we have to go through um, within digital assets, kind of bleeding into traditional finance, is going to the bankers and saying, "Don't take my word for it. Just plug Bitcoin into your model, and let like a 1%, 5%, somewhere in
Mhm.
between, and see what the numbers do." And the math has no opinions, right? The math is just the math. And that's what I love about um, Bitcoin going into traditional models. Like anybody with a mortgage, if you incorporate any amount of Bitcoin as your collateral over your house, the performance and risk factor to the bank as far as the quality of their collateral is improved. Like
Yes.
it is improved. And so a lot of these, to me, the longer the duration, right? The more the case for Bitcoin within those. And then
Mm,
again, you go back and you can flip it all different ways. I've seen some models that show, I'll get the math slightly off, but directionally be accurate. Putting 1 to 2%, 100% cash with your 98% cash with 2% in
yeah.
Bitcoin over like a 5 year plus model beats the S&P 500,
Yeah.
right?
But it's
And
true. I've heard that
that
many different forms of that.
Correct. So when you like, to me, that's kind of, you've got to get the insurance community into a different frame of thinking. So for example, if they're like, I don't want to touch any of that because I'm very happy with my 5% yield on my treasuries and my short duration assets. And
Hmm.
you're like, well, why not just, how would you love to get a S&P 500 return? Oh, we'd love that. Way too risky. Well, what if you just put everything in cash, forget treasuries even, right?
Mm,
Just cash, 2% Bitcoin, you'll outperform the S&P 500, right? That, they're not there yet, but
right.
that's,
That's why we're
I just
here.
like where the math is the math is the math. It does not care, your background, your politics, whatever it is. It just is basic math. And I do think, you see it. Um, Larry Fink was not a Bitcoin fan, and now he is. And I don't think anything really happened other than the math is the math is the math, right? When you start seeing the math is pretty compelling. And then, of course, there's a buck to be made by Wall Street on some of this stuff. You jump in. Um, but everything's moving in the direction of faster, broader adoption. So insurance will be late to the game. It will always be cautious, as it
Mm,
should, given kind of the dot-com narrative, financial crisis narrative. There's all this residue that the insurance company has to deal with. Again, they're still dealing with FTX kind of crypto winter issues. And we're
yeah.
still dealing with ESG narrative issues. Like I literally had a conversation 2 weeks ago with a market in London, and with the administrative changes in the U.S., there's a lot more London markets and outside U.S. markets saying we want to get into digital assets. But I
Hmm.
literally had one 2 weeks ago say we love digital assets, we just can't get into Bitcoin mining because of the ESG problems and narrative. And again, you're just once you read the math behind it, you're like, hold up, look at what Bitcoin is, the most ESG positive industry, period. And then you walk them through just some of the base studies of putting, behind the grid in a wind farm or a solar farm or the methane
Yeah.
capture on a landfill, and it blows people's minds. And they're
Yeah.
like, it literally, and you're like, yeah, it's just the math. The math allows the capex for green energy to be better, right? So if we
Yes.
want more wind farms and solar panels, well, we can't be bleeding off 40% of the excess energy during peak load because you don't have the transformer infrastructure to do it. Throw Bitcoin behind it, capex completely comes down on the whole project. You get more wind and solar farms using Bitcoin than less, right? Stuff like that. I think there's this huge just learning divide that it'll take time.
Yes.
It just takes time. So
Yeah.
that'll be the hard work that we all collectively get to do over the next several years.
That's brilliant. That's why we're here. At the end of the day, it's all about the education because You first have
Right.
to understand, well, inflation isn't what you think it is. That way you can approach, okay, I actually do have a problem. If you don't acknowledge that as a problem, you're not looking for a solution. Then we have to get all the FUD away, look at the math of Bitcoin, look at the Sharpe ratio, look at the return, it doesn't lie, and start busting some of those myths. Not only is Bitcoin not bad for the environment, it's not even neutral, it's extremely good. So it's all about education at the end of the day. And this was a very, very interesting conversation, Garrett. I really enjoyed this. I think let's
Yeah.
wrap this up. And why don't you tell people where can they find you if they want to follow you and hear more of what you have to say?
Yeah, I'm on LinkedIn, just Garrett O. Johnston on my LinkedIn handle, and then on Twitter at Garrett OJ. I will say it's funny, the digital asset community is almost exclusively on Twitter, and the
Yeah.
insurance community is almost exclusively on LinkedIn. So that's just
Oh,
another like
interesting.
social media like issue. Like I'm starting to see a little more
Hmm.
cross-pollination over the last 6 months, but that's something that I do not see many Twitter posts from insurance companies. It's almost all LinkedIn,
Yeah.
but either one of those, you can find me, and then you know, I love helping companies walk through the business case for it, and I love talking to Bitcoin startup entrepreneurs because it's just a fascinating world to live in. So
It's fantastic. Well, let's
yeah,
end it on that, Garrett. This was a really great conversation, and maybe we can spread some more signal over on LinkedIn. That's definitely our mission at Sovereign as well. It is
for
sorely
sure.
needed some good education on there, so I'm happy to have you on our team spreading this message. So thank you so much, Garrett. Have a wonderful rest of your day.
Thanks, Daniel. Take care.